Here we go. So it's recording now. Okay. So I share my presentation. Okay. Before I share, I hope you guys can see my listing, right? I'm not using a support phone. Can you see my screen? Let me know if you can see my screen. Type in the comment section. It got to be fast. So okay, yeah, good. Alright, so technical analysis is what we are going to discuss, and this is using technical data. Okay, I don't think I need to start afresh from the definition and all that, because you already know what it is. You have seen the overview from the course. Okay, for those who have actually taken the course. Okay, you have seen the overview from the course. So for those who have not gotten there yet, none of you here is there, but for the replay, technical analysis is using past data, mostly in the charts, to analyze and predict what is going to happen next in the market. So technical analysis mostly starts and ends in the chart. Okay, so you look at the chart, go back in time, see what has happened in the past, and from there you can predict what will happen next, and you make your move. Okay, so the next one, to understand technical analysis, you have to understand the following things here. One is candlestick and candlestick chart, okay, and the price action and the volume and indicators. Okay, candlestick chart, price action are almost the same. They are in the same category because you use candlestick chart. Okay, so price action is mostly about candlestick chart and support and resistance. Okay, and trend line. Okay, so that's the whole thing in price action, whereby the volume is about the amount of coin or asset that is in the market currently, and the amount that is in the buy zone and the amount that is in the selling zone. So the next one is the indicators. Okay, so the indicators can be like RSI, which is relative strength index, and exponential moving average, simple moving average. Okay, the moving averages have many of them. Okay, but the most popular ones are the exponential and the simple moving average. So we are going to use the exponential for this one. So if you don't have trading view here, that's a big disadvantage, because trading view is what we are going to use for this lesson. Okay, so there are other indicators out there, even the ones that are not free, the ones you pay for, or the ones you subscribe for, whether weekly or monthly, and all that. But you have to understand all that. Welcome to Mode. Alright, so you have to understand that technical analysis and the indicators most times don't give accurate signal. They can give you a false signal, but 80% of the time, if you do your due diligence, you are going to get a good result. Why it is so that they don't actually give accurate, like 100% signal, is because a lot of factors can affect the market. Okay, a lot of factors can affect the market. Something like news, just like when Elon Musk will tweet about a coin. Okay, so if you have done your technical analysis, and with your analysis and everything, you have seen your price action, the volume, the indicators, and everything is pointing at that coin is going bearish. Okay, and in the next minute, Elon Musk just tweeted that he's going to buy more Dogecoin. Okay, and people will rush to buy Dogecoin, and for that the price of Dogecoin will go up, which means that your analysis will not be, will not give the result it is supposed to give at that time. So that is one of the things that can affect it, and it will seem like your analysis wasn't correct on that. Okay, so let's look at candlestick patterns, because to understand price action you need to understand candlesticks. Okay, so the candlesticks you see in your chart are not just there for for just representations, so just like that. They have their meaning, and each of them, the way they show up, the way they live and all that, they all have what they signify. Okay, so if you understand them you can predict what will happen. Okay, so the first two we have here is two um mm, two engulfing patterns. Okay, so in a candlestick, if you come to the red candle, the up is where it opens, okay, and the down is where it closes. But in the green candle is the opposite. It closes in the up and opens in the down. So this is why it is so. If you are trying to buy a coin, okay, if a coin is going up, okay, it will go from down, all right, to up. And if a coin is going down, it will go from up to down. So that opens, that means it will open at the down, and then goes up to when the hour is over, or the time is over, because candlesticks represent a particular time. Okay, so that's why if you set your chart in 1 hour time distance, you will see more candlesticks than when you set it in a day. Okay, because each candlestick, if you set it in 1 hour, each candlestick will represent 1 hour. So let's say this chart, then let's say our chart is in 1 hour now. So this red candle will represent 1 hour. So all it will open here, it will open here. Okay, and if at the end of 1 hour the bears took control of the market, then it will it will it will end, right, and another one will open. So that one will begin front and back till 1 hour is over and it will end. I beg, record this class if you can, please. We need to have a reference. Okay, it's recording already. Okay, the session is already being recorded, but you need to be online. All right. So it opens and it closes and all that. So this is how it works, the open and close parts. Okay, so in a candlestick we have the body and the wick. That's the wick is WICK. Okay, so the larger part you see, the four corner part is the body. So the line is the wick. All right. So there are some candlesticks that they don't have this thing, the wick. They just have full full body, and some just have one long wick and a tiny body. They all have what they represent. Okay. So if a candlestick, if you see a candlestick like this that has a full a full body with some wick up and down. Okay, if you see a candlestick that have full body and a wick up and down, so the red one is signifying an sell, intensive sell, while the green one is signifying an intensive buy. Okay, so if you see the one that doesn't have wick, so it's signifying a strong momentum. All right. So if you come now and you see candlesticks that are short, with either wick or maybe, but they are just short. Okay, it signifies consolidation. Alright, that can be a time when the price has gone so much high and is trying to consolidate to accommodate more buyers and more sellers, to take in more much orders. Okay, so that is when you can see some candlesticks like this. And the other one, you can see a candlestick we have shorter body and then long wicks. Okay, so that means in this indecision. That means the both the bears and the bulls, they don't know which way to go. The bears are trying to to push up. The bulls are trying to push up, the bears are trying to push down. Okay, so the market itself don't know the direction to take. All right, let me see if we can get an example from TradingView. Okay. All right. So if you watch here, you will see an indecision here. Okay. So the market don't know the direction to take. All right. So the market don't know the direction to take. So those who trade price action use this data to predict what is going to happen next. So if you see something like this in price action, just know that the market is is trying to know the next direction to take. Okay, so if you now see a bullish engulfing pattern, remember I talked about the bullish pattern. If you see a big green candle, it's a bullish pattern, and it's a bullish engulfing pattern. And if you see a big red candle, it's a bearish pattern. So if you now see a bullish a bullish candle, that means the bulls have taken over and the market is set to go up. So if you are a day trader and you come to the market at the time where there is an indecision, you will not just buy, just go and buy. You wait for a confirmation to know where the market is heading to. All right. So if you now confirm with a bullish engulfing, a bullish engulfing pattern, and you can see that this candle is very big, okay, and has no a little wick, and at the top and both at the down. So what I say here, I thought that is a selling, an intensive selling system pressure. Okay, so if it is in the green candle, that is a buying a buying pressure. All right, so that means that the bulls are going to take over the next hours in this market. So if you are someone who is trading either with a margin or features or even spots, okay, so you would like to go long. All right, so you would like to go long. Okay, so this other one is another indecision thing. So we are going to look into that. So I've confirmed this one for you. I've confirmed this one. So let's move over to the next one. Okay. All right. Here is this is called the hammer. Okay. It can be either in red or in 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 sorry, either in red or in green this thing. So whichever one it is, just know that they are the same thread and have the same function. Okay. Is this a message from us? Yes. Okay, not here. You have to exit my Facebook. So I will know when you guys are sending message. Alright, so um this one represents resistance. Alright. Either a bullish, either a, when it is in the green pattern is a support, and when it's in the red pattern is a resistance. But the both of them can act as a resistance depending on the level the market is at the particular time. Okay, so if it's coming from down, if it's coming from down, is a resistance. If it's coming, okay, it is a support, and if it's coming from up, is a resistance. All right. So if these two these two patterns are found below the resistance line, they are acting as resistance. Okay. So that resistance means that you can see when it's red, it means that the bear markets are trying to you know resist the bullish this thing power. Okay, and when it's in the other color, the green color, it means that the the bulls are trying to resist the selling power. Okay, and so on. So these other ones, both the a long wick with a tiny, a tiny body, whether it's tiny this way or tiny this other way, or very tiny, or is a hammer. They are all they all stand for reversal. Okay, so that reversal means that the market is going to take another turn altogether. So if the market is going in an up trend at the moment, and you began to see candlesticks like this, that means the market is going to it's going to reverse. So if it's going to in the uptrend and you see this candlestick, that means you'll be expecting to see a down trend next. Okay, let me drink some water. Hope you guys are following, right? um Leave a comment, let me know if you are following or not. Leave a comment, let me know if you are following. All right. Okay. Okay. Kinsole, Neto. So let's go into the chart and find this thing I just talked about now. Okay. So you can see a long week with a little this thing here. A little body, and you can see a hammer here. Okay. This one is the hammer I talked about. So you can see it here. Alright. So if I use the trend line and just draw a trend now to show us that the market has been going in the uptrend now, and I began to see these signs. Okay, I began to see these signs. I know that the market is going to take another direction. So that means this uptrend is likely to be over. Okay, so if I'm trading this thing and I began to see this thing, my next move will be to will be to to exit. Okay, so but if let's say I'm trading short, you know I just came into the market, maybe I just woke up and I opened my system and I saw from here. Okay, and by then this part must not have been taken effect. So I I now saw this part, if I'm a futures guy or a margin, so I would like to go short, knowing that the market has been in the up in the upside this way. So with these signs, the next thing is that the market is going to go down. So if I'm not really sure of this thing, I can wait for a confirmation, and the confirmation will be the bearish engulfing pattern. Okay, so you can see that this big candlestick here is showing us a strong bearish um you know a strong bearish power. Okay, so with this confirmed now, I can wholeheartedly go short, knowing that this market is going to go down. Okay, and you can see from from that point, it has been going down up to this level. Okay, so that is for the candlesticks. So how to trade the trade using candlesticks and price action is just what we are what we are demonstrating all this way. Okay, so price action is nothing much than what the price of the market has been. Okay, it's nothing more than what the price um of the market has been using the actions of the chart. Okay, so we can also check from here and see if we can get a confirmation. So if I draw a trend line from here, oh, what was that? I just okay, my bad. I'm drawing a horizontal line. Okay, so test this um trading view out and you know go through all of these tools, because I cannot begin to talk about them one after the other. So just do it by yourself. So if I draw a line here, you can see that it has been in the down side. Okay, so with this now, I can see you know first we saw an indecision here, and here we saw a reversal. Okay, so this indecision, the market doesn't know where to go next. So it doesn't know if it will go up or down. This one is an indecision. This one here is an indecision too. Okay, and here are all indecisions. So through here we saw a reversal, and here we saw a a bullish pattern, and then another big bullish pattern. So that will tell us that this market is going to go up. Okay, this market is going to go up. So from here we can enter the the trade in a long position. Okay, so you can if you enter somewhere here, you can use the measurements to check where you want to exit, and from there you can take your profit. So we can say that um from this point up to here is 26%. Okay, so if you don't want to be too greedy about it, you have to use um you have to use support and resistance. Okay, so these are things that go hand in hand with price action. support and resistance. So what does support and resistance do? So support and resistance will show you where a price of an asset is getting rejected or getting support by the opposite market. Okay, so because this market is controlled by human psychology, just like me and you, we are aim to buy and sell, and people are afraid to sell, and people are afraid to buy and are too greedy to sell and all that. Okay, and it's fear and this thing that controls the market. So you find out that the market often comes to a point, and it gets either rejected or gets supported. All right. So example is this angle now. Okay, we can see that the the candlestick is when it gets to this um to this side, it bounces up, it bounces up. It has not crossed this side, so to say. Okay, so this can be the area of support. So to other confirm this area of support, you can check back in time to see if this area is a key area of support or is just a new area of support. So you can zoom out your chart. Okay, so if you zoom out your chart, you can pick up your horizontal line, and if you place it here, okay, we can see that even the price also got support when it reached here. Okay, so this is where the support actually started from this from the 12th of March. Okay, so if we can go back in time, we can also see that um that area has been a good area of support. Okay, see here too. Okay, so this is where the support actually the support actually started from this angle up until let's go back. Mhm. Until this point. Okay, so I'm using ADA for this because we all bought into the ADA recently and all that. So when I bought that ADA, um I placed my stop loss somewhere here because this is an area of resistance all this while. Okay, so I know that if other crosses somewhere here is going to go more down. Okay, so the area of support is used when you want to put stop loss. Okay, I know some of you have not understood that stop loss of a thing. Okay, so the stop loss is used when you are trying to minimize your loss. All right, when you are trying to minimize your loss and even also maximize your profit. Okay, let me give you an example now. If I okay, I have checked and see that these areas are key area of support. Okay, and maybe let me choose this. Maybe I bought the coin here. Okay, and I want to sell up here. I want to sell up here also. Okay, so I bought here and I want to sell up here. Good. And what I will now do is to put my stop loss. Okay, so I want to sell up. Okay, let me leave this one. I bought here now and I want to sell here, but I'm not sure if this market will still go up more than this level. Okay, and I don't want to lose all my money if the market didn't go up. So I want, even if I'm going to lose, let me just lose some part of it. Okay. So in order to achieve that, I will look for my area of support. Okay. So I get to the area of support. I know that if the price crosses this range, is going to go more than. All right. So, and if I just buy and I put my sell order, the 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 price of the coin can actually go higher than my order, and I can come back and say, hey, had I know. Okay. So what I will now do is to just put stop loss, so that if the price of the coin isn't going up, okay, if the price of the coin isn't going up as I projected and it's beginning to go down, if it goes beyond this part, which is the area of of support, I would like to sell so that I don't lose all. Okay. So we are, who sent a message? Someone wants to join. All right. Well, welcome, Emmanuel. Yeah, guys, stop. Okay, so if it's going down, like you can see now, it's going down, and first it touches this area. Okay. Sorry. If I put my support line, okay, I will put my stop loss below the support line. Okay, because there can be a false distance weak, just like we saw here. Okay, so if you have put your stop loss just at your support line, this week we predict you or get to it and sell off. So you have to put it somewhere below your support line. All right. So we can see that the price of the coin has touched to our support first, and touch and touched. Okay. So because our stop loss is lower than our support line, so the price of the coin began to go up. Okay, and they began to go up. Remember that this is where we initially wanted to sell. Okay, so as it was going up and it reached here, and got a little resistance and also moved up. So if we had just put a stop, a sell, a sell order, it would have sold at this point and then move up. Then we say, chai, had I know. Alright. So you just have to do it this way, so that if it's going more up, you will be in a good, a better position to take profit. Okay. Alright. Let me delete this one. So is there anybody who have not understood, apart from the person that just came now, is there anybody who have not understood price action and um support and resistance? Okay, I have not talked about resistance. I've been talking about support, right? So resistance is where the price of the coin got rejected from going up. Okay, so we can see an area of resistance here. Let's draw the trend line. Okay, all right. So if we had bought a coin somewhere here, so and for a day distance, we want to get the area of resistance first before we know where we put our sell order. Okay, so this is the area of resistance. Price has touched these areas in the past, so it's normal and likely that the price is going to touch it again. Okay, and it did. All right, and we can now say that if price of the coin crosses this area of resistance. That means it's going to go up, it's going to go upper. Alright, just as we said that if the price of the coin touches the area of support, it is going to go more than not just touching. If it breaks the area of support, okay. So we can see it didn't break the area of support; it just touched it and bounced back. So that's why it didn't go more than. But here, it didn't, it didn't, break the area of support here, and it did not break it here. But uh, what happened here? It broke the area of support here, and with that, we saw the price going up. Okay, so you use this area of support, sorry, area of resistance, sorry, the upper one is the resistance, the lower one is the support. So use this area of support to identify where to put your sell order, and you use the area of what am I even saying? You use the area of resistance at the top to identify where you put your sell order, and use the area of support at the bottom to identify where you put your either stop loss or buy order. Okay. All right. Um, the next thing we are going to look at the other indicators. Okay, because you don't just use one one indicator to do the trading, because sometimes they can give you false signal. Okay, so that's why you need to find a confirmation. Any message. Okay, so that's why you need to find a confirmation most times before you take action. All right, so let's look into it. You got the message. Welcome, Sarah. Mute your mic. Okay. So, whose mic is on? Please mute your mic. All right. So, okay, we're going to look at volume. So to find volume, come to indicators. Just type volume. So if you don't have a laptop here, just save up and buy a laptop. If you want to be a day, a day trader and analyze by yourself, and you know read the chart and all that, you need to have your laptop. You can see all these things I'm doing here, though you have them in your phone, but it will be more convenient for you if you are using a laptop. Okay, and if you now have two big laptops or three, that will be the best. Okay, water. So click on volume. Okay, with our little distance so far, you already know what volume is and how to use volume, I suppose. Okay. Wait. Where are we? I'm going to zoom out here. Buying pressure. Okay. So volume tells you what traders are doing in the market apart from the candlestick. Okay. frame tells you the amount of traders that are in the market and which position they are taking. All right. So if we come to this point, we can see that traders are all red. Okay, that means we have much traders who are selling their assets than we have traders who are buying more assets. Okay, so and what happens if the number of people that are selling are bigger than the number of people that are that are buying? What happens is that the price of the asset will go down. Okay, so that's what we saw here. So if you saw your Bullish engulfing patterns and the confirmations, you can further confirm with the volume to know if really there is that big selling pressure, from the bear market, because sometimes you can have all of these red things here, and when you come to volume, it will not be so. Okay, so you always have to use the volume to confirm if what you are seeing in the price action is really what is in the market. Okay, so that volume is much simple and not that that big concept. Okay, so with this number of volumes, you can predict that the market is going down because people are going to sell a lot of um a lot of sellers in the market. Okay, so and after this point, we can just see that the price of Cardano has just been going down. Even crossed our resistance, and it has crossed our resistance, so it's still going down. So as far as it has crossed this resistance, not just a false crossing like this one, but in a hammer, and another this thing, it just going to go down. Okay, so at this point, you can choose to exit and leave because it's going to be more red for you. Okay, so remember that this is about day trading or swing this thing, or the other one. So if you are doing investments, okay, you don't have any business with this. Just 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 remain with the fundamental. Okay? That is where you belong if you are doing investments. But if you are trading the assets either on daily basis or on weekly basis, you need this this information. This is where you get your own data and information from. Okay, so the next thing is the RSI. Okay, let me cancel it and enter it again, so you see. There's no point canceling it. Just come to your indicator, the place you will see FS, something. Type for RSI, you see relative strength index. Okay, that's what it stands for. So you click on it and boom, you get it. Okay. So the relative strength index, the relative strength index is used to show the area of overbought and oversold. Okay, so here is 60 and here is 70. So anything above this 70, where is it? 69, 70. So anything above this 70 is overbought. Okay, that means that they have buy too much. As in, few people have buy enough. And when people buy something too much, it's just like when we are in secondary school, there's something they say, family abuse. Okay, when something has been, has been abused, other people will like to take their leave. Okay, so that's overbought. That means now they have buy too much. Okay, and oversold. That means they have sold too much. Okay, so if you want to use the RSI, so you will discover that when it crosses this area, is means that it has been over bought. Okay, so if it's overbought, people are going to exit. Okay, and we can see that people really, people really exited. Okay, and if it is oversold, that means that people are going to see it as an opportunity to buy more. Okay, those that are in the, in the, which is, in the waiting area, you know looking for a good entry position. So when they see an oversold signal, they will take advantage to buy. Okay, so let me get the oversold here, and it's trying to enter an oversold region here, but not quite well. Okay, you see it's a, okay, here it's entered the oversold region. So here was a good point to buy. Okay, and if you have bought somewhere here as a day, as a day trader, you could have bought somewhere here and, you know waiting to sell somewhere here based on your own confirmation. All right, but this relative strength um this relative strength index is not good to be used alone, because it can give you an, not really a false signal, but a signal that is not really accurate. Because, sorry, um it doesn't tell you how long a position will, will last. Okay, just here it showed us an overbought signal. Okay, but it didn't tell us if the overbought signal will last for long or not. Alright, so if we edited at this point, because it showed us an overbought signal, and we edited at this point, we could have seen that all from here to here was also a great profit. Let me check how many percent it was. So we could have lost up to 20, sorry, we could have missed up to 20%. Okay, if we have using this the RSI to sell, we could have missed a whole lot of 20% within the 16th and 18th, just 2 days. Okay, so that's one of the advantage of using it. So that's why you need to have a confirmation first. Okay, you need to have a confirmation. So if you get your confirmation, you can now decide whether to buy or whether to sell. So one of the things you can use to get a confirmation to sell is the exponential moving average. A lot of people like to use it in, the with the other line, but I'm okay with just this one line, and this is what it does for me and other people out there. It gives you a buy signal. Okay, it gives you a buy signal and also a sell signal. So we can see somewhere here. So if the candlesticks is touching above the 50 MA, so this exponential moving average is, I set it at 50. So if you go here and search for exponential moving average exponential, okay, so that's the one you will get, just this one. So you can go to settings and put, I think it should be on 12 or 9 here, so I will change it to 50. Okay, so that's how I use it. So if the price of the, if the candlestick is above the exponential moving average, the 50 exponential moving average, that means it's a buy order, but not just any candlestick out there. I look for a bullish engulfing pattern, and here you can see that the bullish engulfing pattern here is touching above the 50 MA. Okay, so if I'm to use this exponential moving average, I, I will not wait to get a confirmation from this long candlestick. Okay, so because this candlestick already is a bullish engulfing pattern that shows momentum. All right, and here also is a is crossing above the exponential moving average. Okay, so if you can see that if I have said, let me just use um the RSI. Okay, you can see that the RSI at this point was approaching the um overbought region. Okay, so in that case I'm not going to use the RSI because I have gotten two confirmations, one from price action and secondly from the exponential moving average. And looking at the volume here, I see that the 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 market is going to be bullish, in the next hour or so. So I can just, you know, buy, buy, buy from this time now, and wait to sell. Okay, so and I may not like to use the RSI to sell. Okay, I will wait for a either price action or for another confirmation from the that's the exponential moving average. Let me take some water. Okay, so from here I can see that the price is trying to a bearish engulfing pattern is crossing over the 50 EMA. Okay, and with this confirmation I can only but sell my position. So someone who bought from this point and sold at this point, let's calculate how many percent profit the person must have made. Okay, you sold at this point, so that is 26% profit in 2 days. Okay, so that is a very big win. All right, 26% in 2 days is a very big win. Okay, so you don't want to sell at this point when you have not gotten a confirmation, because things can still go up. All right, so that's why it's necessary to get a confirmation first before you are able to sell, and maybe you wait for a consolidation or a reversal before you can enter the market again. Okay, alright, is there any other thing we have not talked about? I believe by now you should have known how to enter and exit the market as a day trader. True or false? Any questions? Let me know. I'm waiting. Any questions? Let me know. Any questions? Are you sleeping, guys? Are you guys sleeping? If you don't understand, tell me you will not understand. If you have a question, tell me you have a question. Alright. Others nkọ. Ọnọha Uchenna. How can you say, I think your case is totally different. All these people have left you. Okay, the same way you bought is the same way you sell. Okay, decide on the amount you want to sell and put that amount and the price you want to sell at. Then click on the sell button. As simple as that. Okay, since you use phone, because I have actually done a private section for you, and I know I taught you these things that day. Okay, but I think your problem is because you use phone. Okay, maybe I will do a short phone record for you to show you how you can, buy and sell. But I think that is where you are stuck up with now. Kingsley, Neto, what's up? Christian, any question? Christian. Sarah, you came late. Any question? Okay, you use phone too. Okay. So you don't know where to buy and sell, right? No problem. And who's next? Um, um, John Remy. That's you just started the course, so I, I, I don't think you have gotten to this phase, right? But at least you have learned a lot this night. Okay, so when you get to this phase, you will have to come here again for a new section. Okay, all right. Yeah. You never reach here, so but make sure that you understand what I've just done, so that when you get here, you won't start afresh, with the questions. So guys, thank you for being online and to our continuous success. Let's trade and make money. Yeah, good night. Thank you. Good night.